Hello traders, this is Alex with the COTlive.com website. We're going to go over the uh, the WDGAN product that I kind of have out here, the newer one. It's the Planetary Guide. I've added a few things. I've added I got about 36 stocks I plugged in. I'm going to leave the commodities out of it for reasons. I've got, as a commodity broker myself, there's some rules and regulations that maybe I'm violating the ones for doing the stocks too, but I'm just going to talk more about the stocks, and you can apply them to the commodities or FX or Forex or cryptos. I mean, as long as you can plot the chart, right, you can plug it in. Again, this is the same format that we used with the moons, right? The quarter moon, full moon, three-quarter moon, new moon, focusing on the eclipses, planetary alignments, both geocentric and heliocentric. And this is the chart that is up to date. This is right today. It's March 12th on a Sunday. So this includes last week, of course. So first thing I'm gonna do is flip through the daily charts of all these 36. Gives you a more broader view than what I posted on there, because I only went back to the last solar, which was October 25th. And all these charts should have this blue line, which is the solar eclipse close. Few things when I flip through these. Of course, I keep track of the large term percentage swings and that kind of thing. I mean, it's just logical, right? You want to kind of, in your trading, you got to kind of have a plan, of course, and you got to kind of know your own personal stuff, right? Are you a trader? Are you a long-term trader? Are you a contrarian, right? You hear the news and you want to do the opposite? Do you fight the trend a lot? Do you lose money a lot? Do you make money a lot? If you make money a lot, then obviously all I can do is add to your profitability, right? Again, I've been doing this for 4 decades, so my experience and all the customers I have in the commodity sector and see their mistakes, right? Again, I can only say so much because I don't want to, I can't be the opposite of what they want. Unless they ask my opinion, then I give it to them. But yeah, I've lost a few customers because I'm pretty blunt about when they're wrong. Right? No one likes to be wrong. Well, first thing you got to do in trading is get rid of that personal opinion, objectives. It's like what's that movie with Kevin Costner? Oh, For the Love of the Game. He gets up there and he's pitching the ball. And he's got a no-hitter going, and he's playing at the New York Yankees stadium, and it's an important pitch. And he goes, "Clear the mechanism," and he focuses out all the noise. And that's kind of what you got to do in trading, in my opinion. You got to filter out the noise, because otherwise you get caught up in that you're going to be right. Well, just don't be. I don't care if I'm right. I just want to make money, right? That's my objective. So I keep it pretty simple. First thing you always want to kind of do is pattern recognition and that kind of thing. What's it done in the past? And really, if you don't trade if you focus on just a few stocks or commodities or Forex, whatever, you better know everything about those, right? Because again, there's no excuses to be lazy. It's your equity involved, so you want to make sure that you parlay your time accordingly, right? One of the patterns that I always look for is bear traps, bull traps, right? We had a bear trap. This is Caterpillar. We had a bear trap here. Took out the lows, but didn't accelerate. Right. One day it accelerated, and that was it. We had a kind of a, highs up here. We had a bull trap on a longer term scape. It really didn't accelerate too much, a few percent, and then it fell apart. Here's the solar eclipse, right? And one thing that I also look for is if the solar eclipse looks like a low or a high or a chop. So this solar, was close enough to low, and it gapped right here. So that gave me a little bullish tint on the thing. Bank of America looked more like a high. And again, percentage swings, it has, pretty big ones. And you also got to look, see how violent it can get. Well, we know it can drop hard, right, based on the history into the COVID break. Well, this wasn't a COVID area, but it still dropped 41% in a half a year, and up 31% in a month or two, right? So you kind of see if it's a violent market that you're in or looking at. So that, kind of tells the tape. Now here's the solar eclipse on Ford, and you can see that it's chopping. We haven't made a new swing high or a new low since July. I consider this the main swing. So we know that there's stops brewing down here more than likely. One adage that I always follow is post-bull markets have a long tail. So I always keep that in the back of my mind. The odds to me, now again, this is my opinion, if the market makes a new low is more obvious, and I think the least past the resistance, right? So, well, let's go to the next one, ATI. That's been a big bull market, several waves. Solar eclipse was kind of the, missed the low by a few days. More of a lunar eclipse probably deal. But again, multiple swings, haven't really broken anything. This is kind of the previous, break points wise, not percentage wise. So, time is important to kind of study. You'll find a lot of patterns in there. Also, if the swings are broad or fast, I think is another thing to always look for. And then the minor swings like these, right? You kind of watch those. And kind of jotted some notes down here. Let me see. Another thing to kind of do is also look for like annulars, right? This is the main swing low, and we're coming upon it. Now, this is ATI. March 24th was a 540 low. And of course, the overall bull run on this thing has been 800% to the button. So another important thing to kind of realize is where you're at spatially, right? So, 1, 2, this is the third year. I would, we had a real wild bottom. Again, always follow Newton's law. For every action, there's an opposite but equal reaction. So if you have a violent low, spike low, broad low, you should do the opposite. Well, we had this huge spike down, right? So I expect the top to be similar to this bottom, just kind of a generality, right? Doesn't necessarily mean it'll come true, but I always have that as part of my equation when I'm looking at a market. Here's Wayfair, and you can see it's violent, right? You know that. It's had big moves up, big move, 1,400%, man. And then it dropped 92%. Now, again, percentage is a little tricky, but basically, it went all the way back to the bottom, right? So the impulse swings that occur definitely tell the tape. The solar eclipse is down here, kind of part of again, I think a potential bottom or a hesitation for another leg down. I don't know anything about Wayfair. but it's definitely a violent trading. And these stocks I kind of put up here are basically ones that are more violent anyway, right? I'm a commodity guy, so I want to see volatility um, in a market. So that's kind of my thing. Um, I want to see swings. I'm more of a trader than a long term, right? That's my personal preference. Here's an energy stock, EOG. I'll just flip through these quick so I can get to the next thing. Again, the solar eclipse held. We're coming back down. 56% break. Had some violent swings, right? So again, you know that, right? So again, you could see some violence here. Gaps also you got to be prepared to look for, and anomalies. The market has some anomalies, and I'll show you some of those here in a bit. You want to understand those, that it can happen, and maybe move you into options or something, right? That are a little more safe if you can get them done. This is Elon. It had a new low here, right? A lot of these markets made new lows with the announcement from the Fed. I don't understand the Fed, but I have some conspiracy thoughts, but that's what it is. Now you can see this is one of those where it had some weird, like this day here. Why did that occur, right? Is it that thin? Is it controlled? Is it big outfits, big funds that control these, and they just blow out and then get back in, right, to cause volatility? So again, you always be aware of those, and again, those are the type of markets you might be interested more into option trading. Just the stock symbols up here, by the way, if you haven't noticed. I'm just kind of thumbing through these as I go. There's 36 markets that I put on this format, and these are the ones I'll kind of do. And here's another anomaly that occurred. A lot of these markets had them in here, after the first month of the year. I mean, again, is that real? I mean, what caused that? So if you know they can do that, you know they can do it on either side, right? They control the market, whoever it is. Here's another one, NTR, jabbed out the lows, and then back up and kind of made a bull trap out of these swings. We're kind of chopping. Solar eclipse is kind of the resistance. ZTS. Big bar here down prior to the Fed announcement, by the way. So, what was going on, with the gap, right? So, always know what you got. This is John Deere. Again, took the Fed announcement pretty ugliness on a huge. This is the John Deere for the funds, the ETFs and stuff that like Moo and some other ones out there. John Deere is part of their large portfolio. So when John Deere goes down or up, Moo and some of these other ones that are ag related make money on that or lose money, right? So if you understand the ETF and what's the main component, really you could just trade John Deere and not Moo, right? So let me see. This is Sandridge. Again, history. Started at almost went bankrupt, I think, and then all the way up. Now this is basically a natural gas company, and they switched over to some more crude stuff. 41% total, or 4,100%, 4,100% rally, right? So again, a broad bottom. I would expect some type of broad top. Um, so I don't, whether it's over or not, it's hard to tell. But you would expect. Well, we did take out these lows already here to yesterday, Friday. So and it closed either on them or below them. So the opening Monday is going to be important for Sandridge. Another one that felt the pressure, energy stock, is Marathon MRO, and you can see it had a 1,000% rally, 41% drop, almost half, not quite, 72% back up, made new highs again. There's your bull trap. A weird anomaly though, right? You keep that in the back of your mind and maybe sway you more into options. And I'll go through what I do on my program, the Excel spreadsheet that I have out there. This is Occidental and Chevron. Again, kind of a top up here. Again, we had a violent spiky bottom, but as a long-term secondary low, what is that, 6, 7, 8 months, whatever it is, I would expect, to watch 6, 7, 8 months down the road, equal distance probably. Now we've already kind of had that here to here, right? So maybe we don't need to do that. Obviously the trend line has been broken, I think. Let me double check. Let me draw it from here. Yeah, the longer term one hasn't been violated. And this one is on it pretty much, kind of went through it, right? So now we didn't close lower than this low. So again, Monday's opening will be pretty important for Chevron. Now for myself, as an investment, right, more than speculation, I like to create my own fund. And let me explain how I do that on this next segment here. Now let's go through my quarter moon chart that I have and just kind of take a quick glance. I'll run through these pretty quickly in the same order. There's Apple, Caterpillar, new lows, Bank of America, new lows, Ford, kind of an inside so far, new lows, trend down now from being a bull to potentially new trend, unknown yet for sure, but Wayfair kind of down, IBM down on a pretty good bear decline, and again you watch for 90 degrees, right? Here's 90 from this high, and that's this week or this moon period, which ends on the 15th, which is Wednesday. So Wednesday at 2 in the morning, so maybe Tuesday, right? I always give it a day or two. So then of course you also would keep an eye on the 45 from the secondary event. I take the highest close typically, and we knew it didn't bounce there, and even if you took this one, right, it would be here. So, and this was also 120 degrees here, so we went through that. Again, alert, 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 right? Warning. EOG back on its lows. PXD, Pioneer, another energy stock, kind of on its lows. This is AT&T, kind of on a sideways chop back to the solar. CME, which is your quotes and stuff that you get, Chicago Mercantile Exchange. Back to the solar eclipse, kind of a chop. NOG on or below the mathematical one-to-one trend line from the solar. So again, something I just keep note of. 90 degrees over, missed the high. So again, I kind of look for them to 120, which was missed the high, right? So then you look at the secondary event, and I would expect this one to be a high, and if it's a low, then I'm less bearish. Here's Pilgrim Pride. Again, I kind of keep it in the ag sector with a few sprinkles of banks and tech, but mostly ag sector and energy sector. Elon, and again, these are the 36 that I'll show you how I put together my own fund, and how I do it. Again, everybody can do it differently, but just to give you, for the newbies and people that haven't been real successful, might need to format their own programming. It depends on how much money you got, right? And to invest, your initial deposit, or how much you put in monthly. Again, new lows here. Mosaic, fertilizer company, went up from looking pretty good, had a bull trap, and then busted out. Here was kind of the trend change that I would use. Trend change here, kind of a pivot area, right? Went up, got a little spiky, dropped back down. Here's TSN, it's just Tyson. New lows here. This is Zotas. This is a pharmaceutical, the only one I have. But again, kind of been in a bear trend here recently. Del Monte, which has been on a pretty good bull run, 90 degrees over from the low. Looks like it was close enough for government work. Be a little cautious here on being a bull. The trend is still up on this until we take out 30.25 or 30.21, and then that'll flip it to an O on my chart, right? X's and O's. Here's Corteva. That's kind of getting close back to the lows. ADM's been on a bear trend, pretty nice bear trend. And there's Titan, ag machine kind of builder, acting weak. So the ag stuff is pretty sickly. This is Alamo. I don't believe this is the rental car thing. I think this is a ag machine place. Kind of had a big pop, and we broke trend here on mine. Here is Agco, again, another manufacturer. Kind of a bull trap, and 90 over was kind of a low, so now I'm watching the 120, might be a low up against the 1-to-1 trend line. Maybe, right? You follow the trend, don't just guess. Here is John Deere. Sandridge, again, had a little flip. Now my system that I'm going to show you would have went long, but logically there was no reason to put the stops there. I would have had them up here. But Marathon, new lows. Occidental kind of back on the lows. The 1-to-1's holding. Here's CVX, which is Chevron. And again, back to the lows. It had a little flicker here. And again, there's swing trading. There's momentum trading. There is longer term pattern trading. What I'm going to show you next is how I would present it as a symbol and just a straight mathematical deal. Again, all those trends up or down I put onto this chart, and currently out of the 36 stocks that we have, only 4 are up and 32 down. That's a big drop from last period. Now again, I wouldn't have put this out until Wednesday, but we did such a big flip because of the Fed announcement that I'm bringing to you a little early. So I might do another quick update after Wednesday to show you where it ended up. Um, but you can see that, again, I made a quick fun deal, with links to save it in, like let's look at like Caterpillar, and these are the last trades that we had, how much you made, how much you lost on 100 shares. But I also break it down into how do you trade it, with limited funds. If you traded this right now on 100 shares of all these 36 stocks, it'd take you 334,858 without margin. So, $500,000 is not enough, right? You really need $1 million portfolio to trade these on a 100 share basis, right? Well, when you got John Deere trading at 400 and something dollars a share, obviously becomes a problematic a little bit, because that's a chunk of your, you got 40 grand in John Deere. Well, what I do is take the highest stock, which, I got John Deere at 450. You could probably round up to 500, right? Because you want to have excess in there. And so what I do is take all these 36 stocks and divide it equally, right? So each of Apple, Caterpillar, Mosaic, all these in this list have an equal bearing into, then I divide that out between the 450, and this is the number of stocks or number of shares per stock, right, that I invest in. So, that breaks it down to about $16,200. So you'd want to round up to say, you put 20 grand in your stock this is a portfolio, right? So what I would do then every solar eclipse, I would adjust this. Now, some people do it at the end of the year. Some of the funds do every 6 months, right? I would just, again, since it's a private, your own fund, right? I would just base it on the solar, or maybe the moon before the solar, the 3/4 moon, quarter moon, whatever, based on those charts that we just looked at. So that's how I come up with these on the modified fund, right? So you have equal bearing. So John Deere would have 1 share. Caterpillar, again, it's at $252. That would be 1 share. I'm rounding down, right? Because I want equity, excess equity. I don't want to use all my equity, because you will be wrong, right? But this is a long-term deal, and again, since more than likely most people do long only, you can see that the spreadsheet breaks it down and tells me these are the only 4 stocks that are up. So these are only 4 stocks that you'd be currently long. You'd have got stopped out of any other ones that you had. Let's go back to this. I think I made a little this is the long fund only, and your modified, right? So it's based, here's your shares, the same ones that were over here, right? These amount of, and again, so again, your total amount that you would have made, again, I just went back to the last solar, basically the whole month of October, and this is where I started this. So I went back, all those charts that we showed with the moons, right? They all start on the solar eclipse on October 25th. I went back to the 1st of October and up to involve the solar. And you can see that, these are the what you would have on your modified, 2 shares, 112, 36 shares in Ford, right? This is what you would have made or lost. And again, you can see there was losses in there because some of the markets were choppy, right? They didn't have a trend. And again, I'm not adding any filters to this, right? So when it's a sell, I take the sell. When it's an X, I take the buy. Now that's not swing trading, right? Swing trading, you'd have your stops way up here, and once you make a new low, then swing trader would then put this. What is this? This is Chevron. You once you make a new low, then you lower your stops here, right? So swing trading is more of a long, it breaks it down even to a longer term format. The moon chart here that you're seeing breaks it down into kind of a weekly, almost kind of format. Again, not quite because it's a moon thing. So it goes, hourly, minutes, intraday, daily, moon period, and swing trading is a longer term format. More risk, more reward, right? Logical. But there was some, again, a little thought process. You don't take the, you can take this as gospel and just follow the data. And I'm not going to sit there and promise you that it'll make money, but more than likely it has merits, right? That offer you again, you're looking at a return on an investment. When you do a fund like this, you're not looking at a big bang. You're not. Now, again, this whole format follows the trend until its completion. So let's look at a few of these. Well, this first trade on Caterpillar was 123 days long, right? That's X's all the way up until it finally made an O. So, it was $5,428 on 100 shares. Let me see. I guess I didn't. It made $54 on one share, right? So not 100 shares, but one share. So that's, again, relative, right? But when you're dealing with a portfolio of 20 grand, I mean, that's a pretty good return for one stock out of the 36. Bank of America, here's your share breakdown, right? You got 12 shares that you're using. You made $41, made $16 on the long only, right? I'm not taking the sells because, again, most people wouldn't do that. Your retirement funds and stuff won't let you sell it. You can do options, probably, puts, but or calls, right? But they won't, without, you don't want to margin stuff in those, so you take the long only. But that's how I break it down, right? And all these are similar, right? And you can plug in anything you want. I'm just using these as my parameters, and but again, these are all included in that thing for people that have purchased it. This planetary guide times all those, and the commodities will be on there as well. But it gives you a format at least to work with, right? Again, you can change these. Now you have to go back to each chart if you change them, right, to your own stuff. But again, I like 36. It's a nice number. Find 36 stocks that you like and plug them in. Do your back research. You can go back the first of the year. Some people like to start at the beginning of the year. I went back to October, right? So just to have the data. Now, if you're only going to trade a few markets, then you want to go back more than just October, right? You want to go back 5-10 years and have all the data, plug it in, do your homework, and gives you more of a reliable read. So, yeah, I mean, it's all relative, but let me pull up the. Yeah, I mean, currently you got, and these are longs and shorts with 100 shares. You have $18,000 worth of profit. Now, again, because you're short, right? I mean, it's in a lot of these are in a bear market. So if you're the long only was 12,000 for a lifetime is again the 1st of October, right? So it did pretty good. Had some pretty good losses on 100 shares. And again, the modified, where it's only divisible in your modified fund, it made $482, right, on 20 grand, which is 3 months in. So again, not a bad return. Of course, commissions play a part, right? You don't want to be paying much commission or any when you're doing a fund like this. Now, as a commodity broker that gets paid on commission, I understand the importance of that. Robinhood and some of those other outfits trade the stocks and ETFs and whatnot with no commissions. So something to think about, right? I'm not promoting Robinhood. I don't know anything about them too much, except for they do offer you a way to trade stuff like this on a lower amount, right? Now, if you got rid of John Deere, you could and plugged in a different one than John Deere, you would up your ante, right? Let's say you got rid of John Deere and put something in that's $100 share stock. Well, the next highest one is Caterpillar at 227, and that's the one I'd plug in then, right? And then you'd have more shares to deal with. So almost double. 225 to $500, right? So you'd almost double all these shares, and profits and losses would be doubled. So again, but this is just a format. But again, the concern is the flip right here, and the overall index, I guess you want to call it, of these 36 stocks is definitely ugly. So now maybe ugly's a low, you don't know, right? But you follow whatever you're going to do, you wouldn't get long. You don't want to get long. Bank of America or IBM's a good one, right? You want to give it a little bit, right? You just don't get long because it looks cheap. You want to find something that at least it has broken something, right? If you'd have tried to pick here, you'd have lost. Pick here, you'd have lost. You just got to avoid guessing. Mathematics is always a solution that I appreciate, and that's how I kind of go through life. And the 4 decades, longevity is the key, right? Equity is your blood. I mean, that you want to keep your equity. Options, I wish I could get into those more. I'm a big option guy. I believe in options. It allows, now again, you can't do it on split shares, right? It's a 100 share deal, so you definitely have to modify this. But you could definitely have a set equity and do all 36 of these for a lot less money. 100 grand would probably get you a good option program. All right, I rambled on past my time limit. That's all. Be careful this next week. I might get back to you Wednesday if I can. Again, and this is my website, cotlive.com. I haven't updated this, and once I do, I'll give you a little video on it. But the freaking CFTC is delayed. They keep adding 3 or 4 months. Whoever got hacked, they pretty much shut down their website. So they're getting caught up. I ain't gonna update this until they get complete. So, all right, this is Alex signing off. Have a great trading next week. Bye bye.